Hello and welcome to another episode of the Markets at a Grand series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the New York Open with a focus on trading. So we know that there's quite a number of things that have happened this morning. One of the key highlights being that the stock markets in China almost collapsed. They had a big sell-off early in the morning with the Hong Kong or the Hang Seng 50 index dropping over 10%. We had the Chinese A50 index also dropping by over 10%, while individual stocks are basically currently trading down 10 to 20% for the biggest losers, whereas the ones that have maintained are down around 1 to 2%. So that has been quite a key driver in the market. We know that the economic calendar is quite thin today. And of course, if you look at the earnings calendar, we only have one major company reporting earnings today. It has already done so. That's the Pepsi company. And of course, we'll be looking at other key developments in the markets before we approach the New York Open, which opens at 4:30. That's 18 minutes from now. So once you join in, kindly say hi on the live comment section, and that should confirm that everything is working just fine. So as always, if you have any questions relating to the presentation, feel free to raise them in the comment section. And as I will be responding to those questions as we continue. So disclaimer, as usual, this session is not investment advice. It does not constitute a recommendation to trade. It's purely educational. So you should always do your own due diligence and practice proper risk management. So good afternoon, Margaret. Good afternoon, Peter. Thank you guys for joining. So let's get things started. I'll be jumping right straight through to the economic calendar. So this is the Forex Factory economic calendar. And as you can see, today being the 8th of October, we don't have much happening. So clearly, since morning, we started with a speech from our Fed member, Musalem. Then we had the BRC retail sales monitor for the UK, which was up 1.7%. Westpac consumer sentiment, 6.2%. Average cash earnings in Japan were up 3.0%, which was a big miss from the previous reading, which was 3.6%, which was revised lower to 3.4%. Household spending is also down in Japan, as well as the current account, which has improved to 3.02 trillion yen. So we heard the monetary policy meeting minutes. Nothing major or news came in from the minutes. We had the ANZ job advertisements coming in up 1.6%. This is quite an improvement from the previous drop of negative 1.8%. NAB business confidence slightly improved to -2 from -5. German industrial production has been quite a major news for the day, despite being low impact news. So we saw industrial production jumping higher, 2.9% in the last 1 month, up from the previous reading of, in this case, -2.4%, which was revised lower to -2.9%. So for the rest of the day, we have had quite a number of things. I'll try and refresh things just to update the current data. So for the rest of the day, we'll be looking at 2 speeches from FOMC member Bostic as well as Collins from 7:45 p.m. Then the other speech will start from 11 p.m. So we have had Canadian trade balance, which came in worse than expected at -1.1 billion Canadian dollars. And we have also seen the US trade balance, which came in very close to the expectation at -70.4 billion, despite an expectation of -70.1. This was a slight improvement from the previous reading of 78.9 billion. So clearly, we don't have any major market movers for the day unless there is anything of a key impact that is highlighted in the news today. So if we, let's say, get some strong, let's say, dovish or hawkish comments from Bostic as well as Collins later in the day, perhaps we'll be seeing a key market driver. But for now, it seems like price action traders territory. So besides that, I will try and go through a highlight of a couple of things that we'll be expecting for the day. So one is PepsiCo. PepsiCo, which is the company that owns the Pepsi brand as well as many other retail brands. made news earlier this week when the soda pop and snack maker said it is buying Mexican American food company Seed Foods for $1.2 billion. So the company will be back in the headlines this Tuesday when it discloses its third quarter earnings results ahead of the market open. So remember, the market open is happening in a few minutes, and as we already know, the company has already reported its earnings. So I'll be checking on that right away. Just give me a second. Trying to check the highlight for Pepsi. So I remember sharing this earlier on Twitter. So Pepsi reported earnings this morning, post numbers of one. The earnings per share was $2.31, which beat the expectations of $2.29, whereas the revenue was $23.3 billion, which missed expectations of $23.6 billion, which means that the company reported mixed earnings. And by mixed earnings, it basically implies that on one side, there was a beat, so the earnings were better than expected, but revenue was lower than expected. So at the stock market open, it was down about 0.5%. We'll be watching the stock to see how it trends for the rest of the day. So besides that, I'll be checking on other highlights in the market. So just give me a sec. So in terms of other corporate announcements, so besides the earnings from Pepsi, which were released earlier, we'll be seeing an AGM from Procter & Gamble company. This will be happening today. Real estate.com will also be having an annual general meeting. And then other earnings that are happening today include Aeon, JFront Retailing, Aeon Credit Service, Aeon Delight, and IDT Corporation. So on the next part, I'm trying to look for all the top highlights so we make sure we don't miss anything. So from Business Insider, Pepsi will kick off the flurry of reports this Tuesday following earnings from major banks, JP Morgan Chase and Wells Fargo, which will be reporting on Friday. So remember, the earnings season always kicks off with the banking stocks reporting their earnings. So we'll be having major banks reporting their earnings this Friday. So with the SP500 gaining 5% in the third quarter and trading near record highs, companies have a lot more to prove. So given the growth expectations already baked in the market, of course, we aren't going to want to see any weaknesses there. So this is from Horizon Investments Head of Research, Michael Dixon, who told Business Insider. So we need to see earnings per share expectations exceeded by high single digits in the aggregate to keep the strong year going, in my view, he added. So according to data from FactSet, Wall Street analysts expect SP500 to see year-over-year earnings growth of 4.6%, which would make the fifth consecutive quarter of growth. So the bottoms-up earnings per share estimate for all companies within the SP500 is $60.82 in the third quarter, according to FactSet. Tom Heinlein, an investment strategist at US Bankwell Management, told Business Insider that third quarter earnings results will need to show signs of waning inflation, moderating interest rates, and stable 2025 earnings projections to support higher stock prices into the year end. So as we look at the stock market right now, it seems a little bit shaky, especially considering that the Fed is having an indecision point after cutting rates by 50 basis points last month. Now we saw the non-farm payroll jobs jumping higher than expected, and now the forecast shifts to inflation, where we'll be expecting to see the US CPI inflation report on Thursday, where inflation is expected to drop further to around 2.3%. So if this doesn't happen and there's a spike in inflation, that will be a major problem for the Fed, and it might consider holding rates higher for longer. However, according to one of the Fed members who reported earlier this morning, there's a good chance that they will be considering cutting rates further if they continue seeing inflation moving towards the 2% target. So as you can see, a key highlight here, and this is from Financial News, Fed's Kugler, I will support additional rate cuts if progress on inflation continues as expected. So right now, there's a lot of indecision in the dollar. So if you look at any dollar trader in the market, you'll realize that they are currently having an indecision problem as the dollar index continues trading in a flag. So I'll be showing you the highlight shortly. So the dollar index is right here. So this is what we are looking at. Just give me a second. Trying to look at another one. Yeah, I had done my analysis here. So this is the performance of the dollar index. As you can see, there was a big jump on Friday during the non-farm payrolls. Then Monday, Tuesday has been more of a sideways momentum. So we would say that the dollar index is currently trading in a flag, and this is the overall direction, which is more sideways than trending. So we are currently seeing this period of the dollar index where it's neither going up or down. It's awaiting the next key market driver, which will determine the next direction. So the real question is, what is moving the dollar? Well, there's quite a number of things. One is monetary policy, which is driven by the Fed. And as we have seen from the Fed in the last meeting, there was a cut, which led to a big sell-off in the dollar. And even before that, the dollar was already trading low. So last week, as there was anticipation of the non-farm payrolls, we saw the dollar index making a very strong recovery from 99.843 and hitting 102 within the same period. So the main reason this was happening, it was because of the Iran attacks on Israel. So the Iran attacks on Israel led to a movement where investors switched from risk on to risk off. And when investors are afraid of something that might happen in the markets, they tend to buy safe haven assets, with the dollar being the favorite. So whenever there is these insecurity and uncertainties, especially in the geopolitical scene, we tend to see the dollar strengthening, and this was exactly the case happening last week. So now we know that the Fed is faced with two major problems. One, it's trying to get the inflation to drop down to 2%. It's very close, having dropped it from 9.1% down to 2.5%. It's very close to getting to 2.0%. On the other hand, unemployment was worsening. It had gone to 4.3%. But based on the non-farm payrolls report that came in last Friday, unemployment rate dropped to 4.1%. And as a result of that, there is increased confidence that the job market is a little bit healthy. But then later analysis on the data that was released on Friday showed that almost 800,000 jobs that were reported were government jobs, meaning that these are non-productive sectors, implying that the productive sector, which is the private sector, did not grow as much, and there might be hidden vulnerabilities in the labor market that were not reported. So there's still concerns about that. So before we get to the next Fed rate decision, which will be on November 7th, then we will be having the US elections. So the US elections are also a major or a key driver to the performance of the dollar. So those are the three main factors: the Fed monetary policy, of course, there is the US economy, there is the geopolitics happening around the world, especially in the Middle East, and now the US elections. So those are four factors that you should be considering when you're trading the dollar between this period and when the US eventually does its presidential elections, which will be on November 5, which is 27 days from today. So Knowing what we know and seeing that there's nothing much happening with dollar, it makes sense to be looking at other markets where there could be opportunities. And the key highlight here is the China A50 index, which had a big crash this morning as people expected to see some big stimulus from China, but the People's Bank of China did not announce any, leading to a big sell-off after the Chinese guys came in from a holiday. So the big sell-off was quite substantial. So right from the close of the market yesterday to the low of day, the China A50 index was down 13.41%. Yes, it has made some recoveries, but even right now, it's still down over 10%. So this is not usual, especially if you consider what happens in the US side or on the West side. So if the SP500, the Dow Jones, or the Nasdaq drops by 10% from its recent high, whether it's within a week, a month, or whatever period, we usually consider that as a stock market correction. So you can see that this is a correction that really took about 2 hours to be priced in. And there was an overall panic leading to the big sell-off. And the real question investors are asking themselves today is, will this sell-off continue or will the stock market recover? So this comes amid a very strong rally that happened over the past couple of weeks. So if you measure the performance of the stock market over the past 2 weeks, you'd notice that the market was up about 38%. And if you add the performance on Monday, then you'd notice that at some point we were up 45% in 2 weeks. So this could as well be also a product of profit taking. So it's not usual for investors to make a return of 45% within 2 weeks. So it makes more sense to price in some form of profit taking. So in this case, since China already announced key measures to support the stock market, fiscal, monetary policy stimulus package, then in this case, there's a good chance that the market will eventually recover from this big sell-off. So this is one thing to be looking forward to, where the market could potentially head higher. So in this case, we will be observing closely to see what happens going forward. So for now, it doesn't seem to be making such a strong recovery. So we keep observing this price action to see if there is a clean break, and then perhaps we'll benefit as the market heads higher, looking to make a full recovery from this sell-off. So this might be your chance to buy into Chinese equities and benefit as the market recovers from the big sell-off that happened earlier today. So for the Hang Seng Index, or for the Hong Kong 50 Cash Index, we had a similar sell-off. As you can see, this was the bottom here. So since then, as you can see, it was a major support area. So it didn't just bounce off anywhere. So this further solidifies the idea that the market might be bouncing from here. So from the forward chart, this is how the market had been performing over the last 3 weeks. So from this bottom here, the market was up about 35%, which is also not something that we experience every day. So if you're a trader, you know this. We know, for instance, the SP500 on average does about 13 to 14%. On a good year, it might even do 35 or even 40%, but that's on a span of 1 year. So it's not something that happens in 3 weeks. So if an investor who is used to making 10 to 15% a year basically gets 35% in a span of 3 weeks, you should be sure that that investors will be looking to cash out some of the profits, and that might explain the sell-off that we saw earlier today. So in this case, I'm expecting a strong bounce from this area and the market to continue with a path of recovery. So that's already a big enough correction. So perhaps we should be seeing the market continuing to push further upwards. So besides that, there's also other asset classes that have performed reasonably poorly. The European stock markets were affected by the Chinese sell-off. So we saw the big gaps happening, especially on the French 40 index, big sell-off, but then spent the rest of the session making a recovery. So after the big sell-off that happened around midnight, you can see that the French 40 index has managed to mount a recovery and crossed the gap. So what next for European equity indices? They seem to be facing some level of support here. So there is a good chance that we could be seeing yet another bounce from the lower trend line and the market heading towards the higher side, perhaps even looking to form a new high. So we should be watching this closely, especially as the ECB continues with rate cuts, which tend to be positive for the stock market. So for the Euro 50 cash index, we have a horizontal support in this case. So an area that has acted as support several times. The market bounced from there successfully. Then notice that in early morning trading, the contagion effect led to a sell-off in European equity indices, got to support and then bounced strongly. And now we are on the verge of further push towards the upper side as we enter the New York session. And there's a potential we'll get to this other side of the range at around 49.77. So for the Spanish IBEX, also had a big sell-off early in the morning. So far, it's reversing the impact of this sell-off here. It has erased all the losses, and now we are about to go for yesterday's high. So this seems like a likely idea that the market will be going to retest this area here around 11,775 price level. So for the German DAX, also we had a big sell-off. The market erased all the losses, and especially after the reporting of the German factory activity improving better than expected, then it raises the potential that the German stock market could start recovering. And in this case, a potential for the market to rally to 19 to 24, up from these strong bounce. And that's it for the European equity indices. So on the commodities side, we have silver, which is facing quite a strong key level support area here. So notice how many times silver has been retesting this area here. So 3 times already in one day, which implies that there's more pressure to keep pushing prices lower. So from the forward chart, this is how it looks like. So we are basically looking at an M formation. For those who are not familiar with it, it's basically described as a double top formation. So the market goes up, forms a top, goes back, forms a neck, goes up again, forms a similar top, and then further back downwards to the same neckline. So in this case, the signal is usually if the market breaks towards the lower side, because if it doesn't break, then it remains within this range. Then we say it's a sideways momentum market. But then if we happen to see a breakout below this area, then that would signal that the trend has changed and that the market is moving further back downwards. So in this case, that's a pretty strong signal to watch, considering that the double top is appearing on a former previous high around $32.52 dollars. So in this case, we should be expecting to see a potential break. No need to hurry here, but if the break eventually happens, then the idea is to go for short selling positions, of course, targeting the next support area here. So in this case, if I zoom out my chart, you notice the coincidence here between these two levels, this previous high, this previous bottom. So potentially the market could head straight for this area here, which is a drop to $30.168. So the VIX or the volatility index has been on a very strong path for the last 3 days. So if we measure the percentage increase from here all the way up, this is about 36% rally. Considering the last couple of hours, we are still up 30% in the last 3 days, which in the last 2 weeks. This is in the last 2 weeks, not 3 days. So in the last 2 weeks, we have seen the volatility index making a very strong rally. And this is usually quite a concern when the volatility index makes a big move. So the last time we saw the volatility index making such a big move, we had a big correction in the SP500 after the volatility index was up 142%. So now we are seeing a similar spike, which indicates that we could be seeing quite a sell-off or quite an activity in the SP500. So how is the SP500 performing? So currently still trading in a range, just bounced from midnight from the lower trend line and is already halfway through. And potentially we could be seeing an extension during the New York session all the way up towards the upper trend line, with also potential targets at the last high that we saw yesterday. So that's the key prevailing theme. So for the Dow, we saw a bounce from the lower trend line, a retest, and now it's seemingly getting volatile. Remember, the market gets extremely volatile during the New York Open, that is at 4:30. So sometimes it's better to wait it out, maybe trade at 4:45 or 5 p.m. when the volatility has normalized. If you just go to the 1 minute, you'll notice the volatility and how fast the candlesticks are moving. So it's often wiser to avoid trading during that period. So it's the same thing for the SP500, some volatility at market open, with most volatility is often experienced on the Nasdaq. So you can already see the candlesticks are making big jumps. So from the 1 hour chart, the idea is that the market now bounces from this area here and rallies towards the previous high. So a potential target of $20,070 per share. So far already playing out quite nicely. So we should be expecting to see some further bullish momentum on the Nasdaq index. So as well as other commodities, we have seen big trend, big strong momentum happening on Brent oil. So the last 2 weeks, we have seen Brent oil make a rally of about 13% before price changed direction from midnight and started moving further back downwards. So this is mainly as a result of the OPEC expansion, or as well as profit taking. Remember, all these guys who are buying and enjoying the rally, at some point you expect them to take profit. So yes, there's quite a nice pullback, but the overall direction of oil is bullish, meaning that I am expecting to see price moving higher. So today is quite to the contrary, especially considering the number of days that the market has been bullish. So this is 3, 4, 5, 6, 7. So for 7 straight trading sessions, the price of oil has been moving higher, and today we are seeing the exact opposite. So in this case, after the big sell-off, at some point, we should be expecting to see a value area. So the value area didn't apply here. So in this case, I expect the value area now to extend to this other area here. So this is the previous support here. So expect some potential price action similar to this. Market gets to this area, then continues with a bullish momentum. So at this point, we should be looking for bullish positions, given the long-term trend, which is seemingly bullish after the price of oil bottomed to an yearly low of $68.531 per barrel. So in this case, the strong bullish momentum is expected to continue, and at some point later on, we could be seeing the trend reversing. But for now, it's highly unlikely that the trend has already reversed. So from the daily time frame, this is how it looks like. So there's still a good chance that we continue seeing this. However, doesn't mean that once the price gets here, you buy. No, that's not how we trade. So we observe the price action and trade what we see, because the market may also extend the bearish momentum and eventually get to 75.761. But for now, if you're looking at trading in the New York session, it's more likely or highly likely that the market started at yesterday's high and might eventually retest yesterday's low. So for now, the short-term direction is that the market may potentially get to this area around 77.143. So I know you've all been waiting for it. Gold. Gold has been trading quite nicely in a range. So in a range-bound market, we don't have much of an activity. So I know for the last couple of weeks, we have enjoyed some good, strong bullish momentum from gold. But now we've had this support area holding on strong around 26.31. We had the major resistance at 26.84 and then another resistance at 26.70. So since then, if you've been observing the price of gold, something familiar has been happening, and that is the highs have only been getting lower. So in such a case where you're getting lower highs, then it's an indication that there's more pressure to the downside compared to the upside. So it's not fair to say that it's all neutral because the participants are not allowing the market to move higher. They're only allowing it to move lower, with the key level support being at 26.31. So now that we have seen the entire early morning being quite noisy, market moving up, down, up, down, up, and now getting into the New York session at this stage, then it's seriously probable that the market could be headed here, looking to retest the 26.31 price action level. So the Japanese stock market index managed to form a very strong resistance here, pulled back to our identified target, which was synonymous with this area here. So after the market got to this area, notice how we had a nice bump, and now the market is headed back higher, with the new target being 39,822. Then we have the major pairs. USDN, as usual, has made the pullback, completed the journey, and now might be headed higher towards the previous high. So in this case, the potential is that the market now heads higher to 149.122 after being in this, I would call it a flag for the last 1.5 days. So this was the overall price action. Remove this. So if you consider this as a flagpole, and then the market oscillates here for a while, and then eventually makes a break towards the upper side. This is often considered a signal the market has chosen a direction, and now you expect the market to retest the previous high or the base of the pattern, which is 149.122. So for AUD/USD, it continues weakening. So as gold continues taking some step backwards, also the Australian dollar, a commodity currency, is expected to continue further downwards, with certain levels being key for traders. Sorry for that. So we could be seeing the market headed for these levels here. So potentially the market extending the sell-off to 0.66991 and a potential extension to 0.66441. So pound yen seems to be trading as expected. So for this particular pair, it has formed a nice trend line on the lower side. So every time the market gets to this trend line, it has found some good support. So this is the third time it's doing it, and now we are expecting that this is evidence enough of a bounce, and the market extends to a previous high around 195.584 with a potential for a break. So for pound USD, this is how it looks like on the daily. So yes, it has been quite bullish momentum since April, with the pound making some big gains, and then a big sell-off here as the dollar was strengthening. But then the Bank of England has maintained that it's still holding rates higher for longer. So the pound is still a very strong candidate for a strong rally. So we expected the market to bottom at this line here, didn't quite get to the area. So our new support area seems to be around this place here. So having bounced quite strongly, and this is on the 4-hour chart, the overall expectation is that the market now starts taking some pips back. So in this case, the overall direction was downwards. So even if you look at even a very short-term pattern such as this one, I'll try and show you this. So the short-term pattern was showing that the highs were getting lower and the lows were also getting lower, and the breakout happened earlier this morning. And what we are witnessing here is a market that is basically attempting to push higher. So in this case, I expect some further upside momentum heading into the New York session. And of course, in such a case, the top of the pattern is usually a target. So in this case, a bounce and a rally to 1.31738. So for Euro USD, still shaky and moving sideways. So we haven't seen much of an impact. It doesn't seem at all very directional. So we will be patient on this one to see if another pattern comes up. So let's stay on the sidelines for this one. It seems more like the market is just inside a flag that seems to be expanding over time. So this is what we are currently experiencing. So yes, the euro is bouncing from the lower side. So unless you're scalping this one and looking for a push towards this area here, then it makes more sense to be patient and wait for the eventual break. So thank you very much, everyone. Thank you for your time. Let's check to see if there's any comments here. So there's a good question. What's your take on US inflation data? So the question is from King, and thank you for the question. So when it comes to US inflation data, I would like to begin by saying the US is so close to getting inflation right. And if inflation gets to 2.3% as expected, or even lower, then the Fed will have more confidence in cutting interest rates. So remember, the rates were high initially because inflation was high. So now that inflation is back down, then it doesn't make sense to keep rates high. So that's why we saw from Fed's Kugler basically saying that if inflation is dropping as expected, then he will be more confident in cutting rates aggressively. So in that case, cutting rates aggressively is negative for the dollar. So we expect to see the dollar weakening if inflation drops to 2.3% or below. So on the contrary, if inflation remains high, let's say at 22.5% or higher, then in that case, there is no reason to cut rates since you haven't won the battle against inflation. So in that case, there is that potential that the dollar strengthens. So hello, Margaret. Hello, Peter, Consolata, J Squad, Francis, Robert Cavale. Thank you for joining. Samuel Ratemo, thank you for joining. So, good question. What do we expect in the U.S. economy as far as Hurricane Milton is concerned? I don't expect much. I haven't really checked deeply on the sectors that are affected, but there are concerns that it could affect the supply of oil, and that should be bullish for oil markets. But then I don't have the data yet. It's only suspicions. So we should be looking further to investigate that and see how much has been affected already and how much is at risk so far. So a good question from Chris. What's your take on indices? The Nasdaq. They seem to be bullish for today, especially after we are looking at getting into the New York, into the earnings season. So there's still a strong likelihood that this range extends, that the market continues trading sideways up until elections. But for now, the current swing, we just moved from the upper swing towards the lower swing. Sorry for that. We just moved from here down to here. The market rejected lower prices, bounced. We're already halfway, and there's a good chance that we keep pushing higher. So for US30, another retest of this trend line here doesn't seem likely that it will break on the lower side. So still looking for signs of a bounce and the market heading higher. And for the Nasdaq, something similar. The market bouncing from here and heading all the way back towards the previous high. So remember, this was a key level support area here, which was retested at midnight, and the market is making quite an impressive recovery. So I don't have an expectation for the CPI this Thursday. So we wait and see what will be reported. Sometimes it doesn't make sense to try and speculate on some of these numbers. It's better off to check the numbers and then react to what you see. So on the question of gold, bounce of 26.31. Let's check it again. 26.31. Yes, it could potentially bounce off this area here. The market doesn't seem to be having all that volatility to cause wide-scale movement here. So yes, we have the FOMC meeting minutes tomorrow at 9 p.m. So perhaps that will be the key driver for gold for a breakout. But for now, up to tomorrow, it seems more likely that the market will remain range-bound with moves like this, down, up, down, up, down, up, and so on. So perhaps even now, we should be seeing an extension down, then buyers come in, push prices higher, and so on. So I'm looking at a potential bounce around 26.31. So also, what is liquidity and how to allocate liquidity pools? To locate liquidity pools and how to trade them. As a retail individual trader, I would say that it's tough to access liquidity pools, and having that data is usually very hard. So instead, we use charts. And when we talk about charts, we know that everything that everyone in the market thinks about a particular market has already been reflected in the market. And if there is data that is not known, eventually it will be known. So in this case, when we talk of liquidity pools, I would say that these are levels where there is a lot of orders that have already been placed or are about to be placed. And in most cases, you'll notice that they tend to lie around support or resistance areas. So for instance, look at this. This area here, where the market had rejections, then you compare with this area here, the market was also having rejections, and then notice what happened here. So market was struggling to move higher here, eventually broke, struggled again to move higher, and in this case, struggled to move lower. So there seems to be some form of liquidity block around this area here. So that's why when the market dipped here, it absorbed all the supply and the market bounced. And now we are looking at a potential rally towards the previous high or the next area where there is some good liquidity. So thank you very much, guys. Thank you for your time. Remember, if you're watching this through X, I would really appreciate if you like and retweet the live. And if you are watching this from YouTube, remember to like and subscribe. So as usual, remember we have a new episode podcast. A new episode of the Bullish Banter podcast. It's available on all podcast channels, including the FXPesa YouTube channel. So make sure to check it out. If you'd like to register for a trading account, check the links in the description below on YouTube. If you're watching this on X, check out the FXPesa page for the links to register for an account. And at the same time, if you are looking to begin your trading journey, we have a free online course. It's available on FXPesa YouTube. Just go to FXPesa YouTube and search for Novice to Pro by Rufus Kamau, and you'll be able to watch for free and fast track your journey to profitability. So thank you very much, guys, and I hope to see you on the next session, which will be tomorrow at exactly 11 a.m. Thank you.